Tesla recently obtained approval from its shareholders to split Tesla's stock, and the company has now announced a 3-for-1 stock split, which will take effect at the close of trading on August 24th, which has stock market participants very excited about this news. This is because the last time there was a Tesla stock split in 2020, the stock flew up over 80% in just 14 trading days between the day Tesla announced the stock split to the day the stock actually split its shares. Given the fact that Tesla stock had over 80% gains in a very short amount of time with the last Tesla stock split, many investors are now wondering if they should buy Tesla stock leading into this stock split. In this video, we'll be doing an analysis to see if it's a good idea to buy Tesla stock before the upcoming stock split. One of the most important things to note about the 80% gains Tesla stock had from its stock split announcement in 2020 is that the market context then was very different at the time. In August of 2020, when the first Tesla stock split was announced, the stock market was currently in the midst of a major bull market, with the S&P 500 climbing over 50% between the stock market bottom in March of 2020 to the end of August that year. Federal Reserve policy was also very dovish during this time period, and the low interest rate environment the Fed was maintaining significantly helped the stock market. So when Tesla announced its original 5-for-1 stock split early in August of 2020, the stock market was riding high and had lots of momentum behind it. This meant that there were plenty of investors and traders who were willing to buy stocks, since the market had been climbing for months without any issue. However, this Tesla stock split that was just announced is facing very different market conditions right now compared to when the original split in 2020 was announced. The S&P 500 this year is down over 10% year to date, and the tech-heavy Nasdaq is down nearly 20% during the same time period. In the current market, there's been a lot of concern among stock market investors about the Federal Reserve being hawkish with its policy and raising interest rates. There's also been fear about the possibility of an impending recession. All the recent declines in stock prices that investors have experienced and the macroeconomic issues means that investors are now a lot more cautious about buying stocks than they were back when Tesla stock rose over 80% in 2020 after its stock split announcement. Much of that 80% rally was due to stock speculation that the lower share price after the split would cause Tesla stock to rise in the future, as new retail investors would be able to buy. There's now less people willing to speculate like that, and the stock market is much more risk averse in general. So it's less likely that Tesla will be seeing a major move higher from this stock split announcement in the same way that it happened in 2020. This leads to the next extremely important point to know, which is that Tesla's stock split won't change anything about the company's valuation or fundamentals. It only changes the share price of Tesla's stock. This is due to the mechanics of how stock splits work. When a company announces a stock split, everyone that owns shares of the stock on the issue date will have their total shares owned multiplied by a certain amount. But the share price will also be divided by that amount. So when the 3-for-1 Tesla stock split takes effect, investors will have 3 times the shares they originally had, but at 1/3 of the share price. For example, let's say you own 3 shares of Tesla stock that are trading for around $900 a share, for a total investment of $2,700. When the 3-for-1 stock split happens, you would then own 3 times the shares at 1/3 of the price. So the 3 shares you originally owned would now be 9 shares of Tesla stock, but each of those Tesla shares would now be worth $300 instead of $900 a share. This means that before and after the stock split, you own exactly $2,700 worth of Tesla stock and have the same exact ownership you did before. The only difference is after the stock split, the ratio changes so you have more shares at a lower share price. This split math means that Tesla's market cap valuation stays the same before and after the stock split. So while the cost of buying a share will become cheaper, the market cap valuation of Tesla stock remains the exact same and does not get any cheaper. So in that sense, you're paying the same exact amount for Tesla as you did before the split. Another major reason that Tesla stock is less likely to have massive gains from this stock split announcement is that Tesla's market cap valuation is much higher today than it was during the 2020 stock split announcement. Back when the original stock split was announced, Tesla had a market cap of around $257 billion, that then soared to nearly $467 billion in the aftermath of the stock split announcement that led to its 80% gains. But Tesla's market cap today is now around $920 billion. So even just a 5% gain in the share price is adding tens of billions of dollars in market cap to Tesla's stock and giving it a significantly higher valuation. Tesla's market cap is at a much more mature state than it was even back in 2020, as it is now one of the largest companies in the world in terms of its market cap valuation. If the stock gained 80% like it did last time from the split, the company would be valued at around $1.65 trillion, which would make it the third most valuable company in the market, behind only Apple and Microsoft. Because of the massive current market cap Tesla stock already has, and the large value even small stock price moves add to its valuation, it's unlikely for it to have outsized gains like it did last time when it had a much smaller market cap. For all these reasons, I don't believe it's a good idea for investors to buy Tesla stock purely because of the Tesla stock split. The market conditions now are less ideal than they were in 2020, and the stock split doesn't change anything about Tesla's underlying fundamentals. If investors want to buy Tesla stock, they should do so only if they believe the company is a good value independently of the stock split. In my personal opinion, I have reservations about Tesla's current valuation and think the stock may be overvalued in its current state. If you are curious why I think that, I have a video about why I think Tesla is overvalued and a risky stock that you can find linked above. This is my personal opinion, and you should be sure to do your own investment research when making a decision about whether to buy Tesla stock. Be sure to let me know your thoughts about Tesla's stock split announcement and the company in general in the comments below. And leave a like on the video and subscribe to the channel for more investing and finance content. Thanks.